Mining firms are looking at other options for their business amidst a continuing ban on open-pit mining. The companies are also starting to feel the pinch brought on by the train law. We have Shaila Francisco with this story.
With the open-pit mining ban still in effect, Philex Mining Corporation is now looking at shifting to underground method for its Silangan Copper Gold project. Philex Chairman Manny Pangilinan says initial study by its Australian consultant shows that the method will not translate to a significant increase in overall project cost. The firm initially planned to use both open-pit and underground method for its $2 billion project in Surigao del Norte, but it has still not received a go signal from government regulators. Because of this, the commercial operations initially planned to start in 2020 will be further delayed. The firm says it may decide as early as September if it will go ahead with full underground operations when the results of the feasibility study is out.
Clearly, our proposal for open pit for Silangan has not made any progress. No? So I think we do have to explore. Sayang yung resources, di ba? So we do have to explore other means to develop the resources. No, we're delayed. There's still a lot of work to be done. I would say probably second quarter of next year we might be able to start again.
The open pit ban is just one of the several policy changes that continue to challenge the industry. Another recent regulation, the tax reform, has also affected revenues of mining firms. Under the Package 1, mineral excise taxes have increased from 2 to 4%.
It doesn't have a significant impact on the bottom line, but it does reduce the bottom line. Philex's gross revenues will be between 10 to 11 billion, so the effect pre-tax would be between 200 to 300 million pesos for the year. It doesn't impact on the existing mine of Patcal, but could impact Silangan if that mine were to proceed.
We have the benefit of this depreciating peso as an exporter, but at the same time, it's tempered by the rising cost in excise tax, fuel, wages, and environmental costs.
While firms like Philex adjust to government regulations, others choose to wait it out. Global Ferronickel, for one, is still hoping for better regulatory environment before it proceeds with its plan to put up 3 processing plants and mine other minerals such as limestones.
We're very interested in putting up a nickel processing plant, but we have, of course, to contend with the existing regulatory framework. The sooner that it becomes more favorable, I mean in particular the lifting of EO 79, and the more, the faster the government is going to open up the industry, then it's likely that we may have this downstream processing being viable. But of course, if and when we were a bit slow in moving, then we will lose that opportunity.
For now, both firms are banking on better metal prices abroad to improve operations. For News 5, Shaila Francisco, we are One News.